Hi, welcome back to the Hub channel. My name is Brandon, and this is high probability short-term live trading with Mike Wade. And we're going to be having obviously a great show for you today. We're going to be doing a market review. You see a lot going on in the market still, even though the holidays are over and you thought things were just going to slow down, they're not, with so much going on in the macro and the whole environment's still crazier. We're going to be going over Mike's last couple trades. He had the Mobileye trade and in the Bitto trade. We closed out the Mobileye trade, but we're still in the Bitto trade, so we're going to talk about that just a little bit. Obviously, we're going to hit up on Mike's Sniper Guidebook, his giveaway, and some current live trades. And right now, this is your time. If you're here in the chat, put in some symbols that you might want to see Mike talk about. Maybe there might be a trade opportunity out there that you want to see. So go ahead and throw those in the chat right now. We are watching and monitoring that. But let's go ahead and bring Mike in here. Mike obviously is the founder of Michael Wade Trade Coaching. And I absolutely love Mike and his trading style. It is one of the best trading styles that I've seen. So you're going to want to pay attention to what Mike has to say. Mike, how are you doing? How's the last couple of weeks been, and what is going on right now with your last couple of trades?
Yeah, always. We're in earnings season, Brandon, and this is prime time for season.
Yep.
There's always earnings happening, but this in January, from this part of January through the balance of February, there's going to be a boatload of earnings. In fact, you can see this graphic here and see the number of earnings that are slated. This is from Yahoo Finance. And you can see that through the rest of this month, and the 5th of February is when earnings really kick in. So that spells opportunity for us. So this is prime time sniper candidate season. So there's going to be so many trades, Brandon. It's going to be hard to know which ones to pick. And I've got a few that I'm looking at for today. And I've picked one out of two. There's more, there's plenty. But I'm going to cover that in a few minutes. But Brandon, you mentioned the markets. This is a chart of the SPYs. This is the ETF that tracks the S&P 500. And here's our, into Christmas Santa Claus rally. And we set new heights here just a few days ago. We set another annual high. That's I think a 15 or 19-month annual high. 480 on the SPYs is roughly all-time high territory. So we've been vacillating, going sideways, pretty much above 470 right here. All right. So I talk about these lines in the sand. What's a line in the sand? It's a support level or a resistance level. And you can see 470. There's been several places where it was resistance. My cursor's kind of blocking it out a bit, but support there, support, resistance. And then yesterday's support, right on the tail of this. Let's zoom in a little bit so you can see this. So there's a lot of ways to predict the market direction, and one of them is technicals. And so when I saw that pattern yesterday, it looks like Thor's hammer, from Marvel. It's a hammer. There's the head of the hammer, and then you've got the tail of the hammer, or the handle, and it bounced right off 470 like a slingshot. I'm expecting the SPYs to continue at least a run up to these prior peaks here, which is 477. If not, begin to get into the all-time high territory at 480. Now, there's a lot of things moving the markets. The CPI, the PPI, inflation's hot for consumers, hotter for consumers. It's less for producers. We had retail sales come out yesterday that were hotter than expected. So what's driving all this volatility right now is that consumers or traders are looking for, and consumers are looking for the Fed to drop interest rates. But the news is still mixed. And so the market's like, which way are we going? Which way are we going? I don't know. Well, you can see it. Bounce, bounce, bounce. Sideways, choppy is the current market complexion. So that channel will continue until it doesn't. And I'm leaning on new highs from here. That's let's just call it a guess. My guess is that further upside, once we breach these peaks here, I think we're going to get into all-time high territory on the NASDAQ. And Brandon, the other index that I want to look at is the NASDAQ 100. Chip stocks. This is going to be apropos in a few minutes. But the NASDAQ, that right there, right where my red cross is all-time high territory on the Qs. The Qs is the ETF that tracks the NASDAQ 100, the biggest 100 tech stocks in the US market. That's all-time high territory. We got our hammer pattern yesterday on above average volume. We are headed up today on the Qs, and I would anticipate once we break 410, resistance, 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 then new high territory on the NASDAQ. And then if you want to drill into just tech, we can go to the XLK, same story on the XLK. So Brandon, you know, I care about market direction, and I do intermarket analysis. This is just brief. I do more than this. But for me, tech is hot. Tech is super hot. You can go to NVIDIA as well. Let's take a chart, a look at NVIDIA. NVIDIA is annual high, all-time high territory. NVIDIA is taken off. Let me get it up here. There we go. NVIDIA, all-time high, all-time high, all-time high, all-time high, all-time high, hammer pattern. NVIDIA off to the races. All right.
Well, so looking at NVIDIA, sorry, and we talked a little bit about this before. NVIDIA is one of those things it has one of the best narratives for what's happening right now in the world. Obviously, it is the chip maker, the go-to chip maker for anything AI. And since AI is having it's basically dancing in the sunshine, NVIDIA looks like it's almost in what they call price discovery phase, where we just have no clue where NVIDIA is going to end here. And this could be one of those companies that breach the top 5 market cap companies this year with where they're sitting. And I think that could happen. And your read on the S&P was right on too. And I don't think that it looks like it may be toppy, some people say, but I think it keep running. I mean, based on the picture that we're seeing with, obviously, this is, what do they call it? A political candy year in the United States, right? The politicians are going to be throwing candy out into the sunshine. And candy is in the form of dollar bills, y'all. So they're going to be doing anything they can to prop up the economy in front of these elections. So yeah, I don't think we've seen the end of this run yet, unless we're going to have a bad election year. So we'll see how that plays out. That's a great read on those charts there, Mike.
Yeah, thank you. You too, man. Thanks for that extra commentary. That's beautiful. I didn't even mention the election. You're right, all about that. And Brandon, what's that guy's name? Powell. He's I know his name like on the back of my hand.
I know you do. What was his name? Dad. Oh yeah, Dad. Okay.
Yeah, Daddy. Please lower interest rates, Daddy.
Yeah, exactly.
But they're meeting. The Fed meets on the 30th and 31st, 2 weeks from now. We'll have an interest rate decision. Not likely they'll do anything, but we'll be looking for Powell to forecast the possibility of dropping rates by the end of the year. And it's not looking good right now. So his narrative will have a lot to do with how the market moves. And that's January 31st at 2 p.m. It's in my calendar. The announcement's made. The interest rate announcement is made. And then Powell speaks at 2:30 Eastern time. And that's when markets could move big on the 31st, which is a Wednesday. So we'll keep, and we'll meet the next day, Brandon. So we'll talk about that on the 1st of February, coming up soon.
Yeah, that's perfect. And they are, just like you said, in a sticky situation. They came out in December, they said they're going to be cutting rates, and now they're in a situation where inflation has started to rear its head again, and so they don't know what they're really going to do. But let's go ahead. Let's take a look at your last couple trades. You got Mobileye, you close that one out, and then you have Bitu. Is it Bitu? Bitto. How do you say it? Bitto? Yeah, Bitto that's still open. So let's go over those trades and see how those are going on.
Yeah. Well, this is the one on Mobileye. And I know we posted it on YouTube. Nobody, I don't know many people that knew who Mobileye was, and I don't care. I don't care if I know what the company is. I find out before I trade. But it came up on the radar, and Mobileye came out and just tanked on bad news, bad earnings. They also lowered their future guidance. And so we capitalized on this was the day we actually were meeting on this 4th of January when that happened. We drew our line in the sand, which is nothing more in this case than resistance. and we put on a trade that would make money as long as this stock with an anchor around its neck with no reason to really rise very much, and certainly not make it back up to 34 in a 2-week time frame. And that was our stance. And the stock made a bit of a run and then came down. And I use tools. This is a risk graph tool. This is what we did on January the 4th. We sold a 34 call that lined up with our line in the sand at 34. And then we bought the upper call. So we sold the 34, we bought the 35 calls. That's a credit spread. We got 10 cents for it. Risk was 90 cents a contract times 5 contracts. So we pulled in $50 with $450 in risk, but a probability of profit that was off the charts. So we basically, this system is about sniping smaller profits, getting on base, getting on base, getting on base, getting on base, and then history tells us we win about 90% of the time, and we take a loss 1 out of 10. That's trading. And this trade we took off on Monday, and we netted, a nice little 10% return, 9% return in a matter of 12 days. So that's the system. That's how this sniper system works. And Brandon, we missed you last week, by the way. I've forgotten how much I like hanging out with you. And I was like, where's Brandon?
I took off. I went to Wall Street. I wanted to get a feel of what was really happening in the market and what they were doing, So I had to go check that out. I feel closer to the market now.
Did you see the bull, the big bull statue?
Of course we saw the bull. We took a picture by the bull. I didn't get in the line. There was a couple of lines here for the bull. There was a line to take a picture of the front of the bull, but then there was another line too. So anyway.
Because the bull is anatomically correct, let's say that, right? All right.
That's right.
Now here's the other one that we placed just last week on BITO. This is an ETF that trades Bitcoin futures. And this was the day we entered here. And on that day, the SEC approved spot ETFs on cryptocurrencies, which legitimizes the asset, the crypto assets, and is generally considered to be good for the cryptocurrency market. And we got in, the news came out in the morning, and the stock moved up. And we were anticipating it continuing to rise, and we put a line in the sand right at 2050. Now, 2050, now again, this was, let me zoom in here so I can see this chart with my old eyes. But we drew a line in the sand at 2050 on this day here because that was support. Look at these bounces, Brandon. Bounce, 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 bounce. Now, since what happened is the whole buy the rumor, sell the news. So the news came out, cryptocurrency dropped. This is Bitcoin. Bitcoin dropped. And look here, the importance of these lines in the sands cannot be underestimated. Look here, we've had a couple of bounces. Yesterday it bounced. That was what's today? Tuesday it bounced right off of 2050. Yesterday it bounced off 2050. Currently, let's see where the stock is now. I'm going to go into a 1 minute, a 5 minute. Let's go to 5 minute bars here. I'm using the Hub software, charting software. It's really cool. And so you can see here that the stock has been vacillating. There's where it was right before the tick. Now I've got 5 minute bars here. Let's go to 1 minute bars. I can even go to 1 second bars, but that drives me nuts. So the stock is still above 2050. And so here's the risk graph. And this is when it gets hot on these credit spreads. All right. So what we did last Thursday is we sold 2050, the puts, right at our line in the sand at 2050. And then we bought an underlying put. We pulled in 10 cents, and we might make 11% provided this support level holds. So this is where trading becomes challenging. Humans don't like to lose. I don't. I like to be right. Just ask my ex-wife. She'll tell you. I like to be right. but you're not always going to be right in life and certainly not in trading. So the way we handle this is you can have your emotional experience, but we have rules clearly identified in the Sniper's Guide that you can get for free. We'll talk about that in a second here, but this guide outlines it. The rules are simple. If the stock closes less than our line in the sand at 2050, then we close it down and we take a loss. Let's say that happens today. It doesn't look like it's going to, but we might lose 100 and, if it closes below this line here, that's roughly our break even. That is our break even, 2050 or so. We might lose 130 bucks. But $130 loss is much better than losing $450. So that, ladies and gentlemen, is the trick to trading consistently, and that is to detach from your emotional experience and be like resolute, like a machine, and close this down if the stock closes less than 2050. That's flat. Take your loss, move on and get another one. 90% of these trades, history tells us, will be winners if you follow this system. So Brandon, we're kind of just waiting. And you can see historically, the stock does bounce off 2050. The news is still good. So I anticipate that we'll get a bounce similar to what we got in the last over the last month when this support level has held. So Brandon, that one's in a little bit of heat, but we're just going to follow the rules. And if we lose, we lose, and we'll just take another one, like what we have coming up here.
I think that's important because while trading, don't get emotionally attached to your trades. When you get emotionally attached to your trades, or you start like, ifing and guessing and hoping and wishing, that's when you start to lose the real money. And these rules are set in place for a reason. So I really like those. And you mentioned your Sniper system, your guidebook. Let's go ahead and talk about that. That is free for everybody. So where do people go find that guidebook, and why is that important for them to be able to grab one of those?
Yeah, when I've been trading since 1998. I quit my job and been trading since. And credit spreads have always been one of my favorite strategies. And credit spreads can be done in a lot of different ways. And so what I wanted to do, the highest probability credit spreads that I know of are the ones we're doing here, the Snipers, which are news backed. You take a bullish trade with really good news, a bearish trade with really bad news. So you couple news with technicals and you maximize your probability of profit. So this particular guide, this is one way to trade credits, and it's the guide that I think will make the most difference for people. It's free. It takes you through all of the steps that I do here live. And when we place live trades, it gets a little fast. So I wanted to slow it down for you and give you a guide step by step by step by step, and have you read the guide and then come to this live trade show, free live trade show. Everything's free here now. On Thursdays at 9:15 Eastern, where we place at least one live trade a week. And the guide will walk everybody through all of the steps, Brandon.
That's perfect. No, and I appreciate that. Everybody needs to pick up that guide. So just go ahead and get that thing. Then you'll be on page with what Mike is doing every single week. The market just opened about 4 minutes ago. And I know you like to tackle these things right when market opens. A trade. What are you looking at today? What do you have on tap for everybody here watching?
There's a lot. This is one that I like the most. And it has to do with what I just showed you around the tech stocks and chip stocks. So Taiwan Semiconductor just came out with earnings, and they blew their earnings out and raised their forecast for 2024. We know chips are hot. We know the NASDAQ's hot. Taiwan Semi is in the chip sector. It's gapped up on the news. This is what's beautiful here. The stock has gapped up on this news. So step one is to draw your line in the sand. The line in the sand says, well, where don't you think the stock can make it back to over the next couple of weeks? And so what I do here to figure out this line in the sand, which is drawn in green there, is I look at support and resistance. And so 105 is a round number. And look here, resistance, support, resistance, 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 So Taiwan could, and it's finding support at 110 currently. It's gapped up big, of course. Could it continue to rise? Yes, probably will, sideways to up, given the sector news, given the stock company news. It could drift down, but how far down might it go? I just would be very surprised if the stock returned back down to where it was, let's say, a month ago on this great news. I'm also encouraged by this 110 level here. 110 was resistance here, and so far today, it's acting as support. So what I want to do, now I could sell at 110, that's a little too hot. I want probability, so I'm going to come on down to 105. And when I place this trade will make money over the next 2 weeks as long as the stock stays above 105. What does that mean? Stock can go sideways. I'm fine. Stock can go higher. Yep. Stock can even drop, 5 points, and I still make money. Up, sideways, and down up to 5 points. So you can see the probability just by, the stock can go 3 ways. And we make money 2.5 of those 3 ways. So probability technically is there, statistically it's there, as well as the great earnings announcement that was just made. So that's what I want to do. I want to make money above 105. Now, to do that, I'm going to sell a credit spread at 105. And I'm going to sell the 105 and then buy the one right underneath. So let me go right into this simulated trading platform. I'm in Thinkorswim, simulated trading platform. It allows me to trade in front of you in a simulated fashion. I'm not taking the trade. I don't take trades that I put out into the public. And then I go into the expiration date. So the expiration, typically the best ones are 2 weeks. So this 2nd of February, these are all the expiration dates. So the 2nd of February, these are the option chains. And then what I'm going to do then to make it easier for you to follow is I've got my calls on the left, strike prices down the middle, and there's my expiration date, and then puts on the right. So what I want to do then is sell this 105 put and then buy the 104 put. And right now, Brandon, I see we can get 12 cents on a $1 spread. That's really good. Now, in the guidebook, this is all in the guidebook. And I have a spreadsheet that will help us determine what our max risk is, what our max ROI percentage will be if we get 12 cents on a $1 spread. Now, as I'm talking, I might be losing some money. So I'm going to move a little fast, go back in. Brandon, I love trading. It's like a game. And I literally have energy coursing through my body because in the first 5, 10, 15 minutes of the market day with news like this, there's traders coming in groves. I want some TSM options. I want some Taiwan options, man. Give them to me. So the market maker, because of the demand, will lift up the prices. So the longer I talk, the fervor starts to die down. So I've got to move a little fast. So what I want to do is use these calculations. The width of the spread is 105. Oh, now we got 13 cents. Good. Keep talking, Mike. There's 1 point between both spreads. All right. And looks like I can get 13. Well, it's 12. Let's make it 12 cents. If I can get 12 cents on a $1 spread, my max risk will be the width of the spread, 1, minus the credit, 12 cents, gives me 88 cents of max risk on the trade. And if you divide the credit by the max risk, 12 cents divided by 88, that's 14% potential profit on this trade over the next 2 weeks. Yeah, I like that. And then I need to figure out how many contracts. If I did 5 contracts of this spread, my risk would be 88 cents times 5 times 100, 440. You got to get now trading rule number 1 is don't risk too much of your money in any given trade. The general rule, accepted rule of thumb is 2 to 3%. So I'm going to assume I have a $25,000 account. In this case, I'm going to keep my position risk limited to 500. That is the most important thing I could even say to anybody in any form of trading. Make sure you insulate and isolate, and don't back up the truck and put more than 2 to 3% of your portfolio in any given trade. Okay, now all of that's in the guidebook, but I got to get this trade on. I want 5 contracts now. So let's go on in here, and I'm going to say, give me 5, please. It's looking at 13 cents. That's awesome. I'm going to hit confirm and send, and I'm going to try to get 12 cents. Go to monitor. It's moving around a bit. It's at 11. There, we got it. We got it for 12 cents. We're in. So now this trade, let me show you the trade here, just so you can see the instructions. I'm trying to make this as easy as possible for all of you. So what we just did was, you can see the fill price here, 54 and 42, a 12-cent credit, selling the 105, buying the 104. So I'm going to put those strikes in. So this is exactly what I just did. We're selling the 105 puts, Feb 2nd, buying the 104 puts, same expiration. Now that you're in, it's important that you follow proper trade management rules. The first one, most important, is if the stock closes less than the short put. That's 105. Let me put that in here to make it really clear. The most important rule here is, if you're wrong, if the stock closes less than 105, buy the spread back and take a managed loss. And then the last one is also to buy the spread back. We just got 12 cents. Let me put that in there. Is to buy the spread back for 10% of your original credit, good till cancel. So what I would do here is put an order in to buy the spread back for 1 cent. GTC, good till cancel. The instant that the market makers will give you that, you'll be out and you'll capture 90% of this 12 cents, which would be about what, 10 cents, 11 cents, 10 and a half cents. So Brandon, really good one. There's others that I could talk to you about, but we don't have time, I don't think. So yeah, good trade. I like it.
No, that's a great trade. And I love it. I love the semiconductors. I know we talked about those already today, and I think they're a great play. So I love putting up trade on Taiwan Semi here, and I think that's going to be a fun one to watch. We are running out of time here, but we have a couple of stocks that people put in the chat. Do you have like 2 quick minutes to maybe hit a couple of charts here, Mike?
Yeah,
let's take a look at, first off, let's take a look at HUM, HUM. And then I have one more for you here in just a second.
Yeah, I like Humana. Here's Humana. They just came out. This is one I was looking at today. And what's the news on Humana? Well, you can find news in a lot of different ways. The fastest way, you can go to Yahoo Finance and then just type in the symbol. News is really important on the Sniper system, y'all. Please make sure the news is compelling. And last year's spike in medical costs forces Humana to scale back profit expectations for 2023. So Humana, their earnings is coming out. And it happens to be February the 2nd. You can find that by going to earningswhispers.com, typing in Humana. And so their earnings, oops, I missed that, Humana. Earnings is on February the 5th. So what's that, about 2 or 3 weeks away? I like Humana. But the problem I have with it is that earnings is coming out in the next couple of weeks. It's doubtful the stock will recover before earnings, maybe up to 425. So I would love it at 425. You know, is it going to recover to 425? Doubt it. It might vacillate. It might recover. But the problem we have is that as we approach earnings, the demand for the options increases, the expected move increases, and the options get more expensive. So this is a rule now. you don't want to put on these credit spreads within 2 weeks of earnings. So we can kind of get in, get out, but you're going to take a little heat on IV Rush. So for that reason, and because there's plenty, I'm going to pass on Humana.
Okay. I like that read. Okay. Let's look at one more before we wrap this up. Let's look at DFS.
Discover.
That's from the chat here. Yeah.
Dude, I wanted this one so badly.
Oh, jeez. What are the chances?
But you know what I didn't like about it? Well, we have some graphics. Let's show these graphics because Discover came out with some bad earnings. You know, they're looking at they lowered their future guidance, and they cited credit card debt and people defaulting on credit card debt. And there's a graphic there I can show you here where the U.S., Brandon, I don't know if you knew this, but U.S. credit card debt is at over $1 trillion, $1.079 trillion of consumer
so they have
credit
included
card debt.
all of my credit cards. All of my credit cards are in there then. We're good.
That's probably mostly yours, right? All that debt.
5 kids? Yeah, that's all mine.
Yeah. Now, I liked it, except there's this thing called support, and the stock is already bouncing off of the 200-day average. So I have this rule called blue sky rule. I don't want there to be anything to stop the stock from dropping. And already 100 support and the 200 is doing that. Now, do I think Discover will go up to 110 in the next couple of weeks? Probably not. But because there's something keeping the stock from dropping further, then that cuts my probability down. And so as much as I wanted this one, and I was foaming at the mouth, the issue we have is that the stock is more likely to stay above 100, and it could make a slight recovery. In fact, I think Citigroup said buy at the dip. So I saw that news later. If I was to do anything on this, though, I would look at a line in the sand right at these peaks here, which let's call it 113 or so. And we could get a bounce. And that's the thing I'm concerned about, Brandon. And, like Taiwan Semi, it's setting new highs and, blue sky and plenty of room for the stock to rise. But here, I just don't think the stock's going to drop below the 200. And so I'm not going to take it.
Okay. That's fair enough, Mike. I like that, and I think that's okay, and I appreciate that take because it looks juicy the way it sits, but I like and I respect, obviously, your read on this. Mike, this has been a fun little session, and I appreciate all your insight. I think a lot of what we talked about here is very valuable for anybody that watched that trade, the semiconductor trade. Obviously, we're going to be watching that next week. We'll do a recap of how that went and how that's going, see if we made money, see if we stopped out or whatever that is, and we'll talk about that a little bit. Mike, thank you as always for dropping by. I really appreciate it. If you don't have that guidebook, go ahead and get Mike's guidebook right now. The link there is for you guys. Check it out. Anyway, Mike, we will see you next week, and we will see you all in the next one as well. Take it easy.
Bye, everybody.